Hey guys, welcome back. So long story short, the market sucked. Yeah, it was pretty bad. Starting off with March 3rd, Trump announced 25% import tariffs on Canada, Mexico, and China that would start the next day. The day after that, on March 5th, major banks including Chase and Goldman Sachs indicated that market indicators are pointing to a higher risk of recession. And on March 14th, the probability of a recession climbed from 17 to 31%, which is not great. And then on March 31st, Trump announced reciprocating tariffs on all U.S. trading partners. All that news definitely had some major impacts on virtually every stock in the U.S. stock market. The Dow Jones dropped for the month of March, NASDAQ dropped for the month of March, S&P 500 at one point actually dropped below its 200-day average, but overall dropped for March, so it was all crazy stuff. And at this point, we've seen what that means, and we've seen the impact on it, but again, I'm focusing on March, which all in all was a terrible month. But if you guys happen to stay in the green for the month of March, that's amazing. Leave your comments below. Let me know what tips you guys have for the rest of us, because especially for me, it wasn't great at all. So going into the details of my portfolio as of March, for the month of March, I lost about 6.37% or a little over $1,000, which is not great. My year to date is the same as what my losses were, negative 6.37% for the month of March. All time, I am still making some money. I'm at 35.42%, a little over $4,000 in overall profit since I started investing about 6 years ago. But again, at one point I was at 50%, which was an amazing milestone. I know we'll eventually get back, but right now, just at this point in time, it doesn't feel that great. But regardless, that didn't stop me from doing transactions on my portfolio that would help benefit me for the long term, despite what's happening in the short term. So when it comes to transactions, I actually made no sales for the month of March. Again, why would I? Just kidding, but didn't make any sales. There was really no need to, but I did add on some money to 2 existing positions that I have on my portfolio. The first one being Broadcom. I added a total of a little over half a share to my position. I did it for the same reasons I had bought into Broadcom over the past couple of months. It's a company I feel like is going to succeed as AI continues to advance despite what's going on right now. Hopefully there is a brighter side at the end of the tunnel, and I feel like Broadcom can be one of those tech companies to lead the way. Plus, it gave me an opportunity to lower my dollar cost average, so I'm always going to take advantage of that. I also invested a small 0.03 shares in Costco. That was like $31, my $30 a week plus something I made in dividends, and that was just to lower my dollar cost average. I actually didn't lower my dollar cost average. This is just a company that I've been wanting to add on. They have a great long-term growth history, so just little by little, I'm growing my position. I don't even have a share yet, so I'm just trying to slowly get there. So aside from long-term overall share price growth, which is one part of my portfolio that's important to me, the other part is the passive income in the form of dividends. So I like to track my monthly dividends. And for the month of March, I actually made $40.89, which for me was the largest monthly dividend check I ever made. That's more than an extra week's worth of investing because I only invest $30 every single week. So something like this was an amazing milestone. As a matter of fact, $40 for the month of March is only $37 less than what I made my entire first year of dividend investing back in 2019. So this is really something that's awesome. And what's just as cool as comparing how I'm doing now in dividends to the past, I like to see what that can potentially do for me in the future. So I use a website called trackyourdividends.com. I'll make sure I leave that in the description below, and I can put my portfolio in there and I can click on their future dividend section, which gives me a general idea based on how much I invest into it, what my dividend growth would be and my share price appreciation growth could be, how much I could potentially make in dividends over the next 5 to 10 to 15 years. And with that, I like to see how that would look if I continue to invest $30 every single week, which I hope to increase in the future, or if I actually just stop investing $30 a week and just rely on the dividends I make and activate DRIP or dividend reinvesting and have those reinvest back into the companies themselves. This is what would happen if I actually stopped investing $30 a week and I just let the money grow on its own. So assuming that and a 5% share price appreciation growth, which is where my portfolio is at this point, within the next 5 years, my portfolio would generate $562 per year in dividends. 10 years from now, $870 per year in dividends, and in 15 years from now, $1,358 per year. That's great, but this is what $30 a week would do. Within the next 5 years, I'm looking at $782 per year, so a little over $200 more. 10 years, $1,455, so almost $600 more. And in the next 15 years, I'm looking at $2,530 per year in dividends. That's over $1,200 more than if I didn't invest $30 a week. So of course, that's something I'm gonna do. And just like I said, I hope to build off that, hopefully invest $40 a week and $50 a week. But just like a lot of us out there, I got bills, I got debt that I gotta take care of. So I wanna make sure I take care of that, maximize my 401k, my Roth, high yield savings, all that other stuff. And then hopefully I can build this up from there. I mentioned this before, but we're definitely in times of uncertainty with tariffs and how long those are gonna last and how that's gonna impact our portfolios for the short term and for the long term based on how those tariffs impact the companies that we invest into. But I think the ultimate goal is to have a portfolio filled with stocks and ETFs that have long-term growth history, and they're based on companies that you really believe in the long term. So you could ideally just automatically invest into that portfolio of stocks and ETFs and never really have to look at your portfolio, or maybe once a week or once every single month. Not be so concerned about looking into it every single day. So that's the overall goal I have for now when it comes to investing, making sure that my portfolio is filled with very trustworthy positions. Having that definitely ensures me that I will see long-term share price growth over the next 10, 20 to 30 years, but also continuously getting paid passive income and having that passive income continuously increase. And again, as I've mentioned briefly in this video, when it comes to dividends, my portfolio ironically performed better than it's ever had. And I'll elaborate a little bit more on that in this video, aside from how much I made and all that stuff. I go into the companies that actually paid me amongst a bunch of other cool details. So if you guys have time, make sure you check out that video. I do appreciate you guys watching this video. And until next time, as always, take care.